Good evening, everybody. Thank you so much for joining us this evening. We got a very good response to this webinar. Approximately 140 people have registered, and we hope you can make the most out of this session. Please add your questions to the chat box, and we will address them during the Q&A sessions at the end. To give you an overview of this program, in the first 20 minutes, we will be discussing 5 myths and facts about the Indian tax returns for NRIs, permanent residents, and Australian citizens' point of view. And 10 minutes for Q&A, and we will answer as many questions as possible. At the outset, we have a disclaimer. This presentation should not be considered as tax advice. Please consult your tax agents, lawyers before proceeding further. I want to start by giving some context about Nobilis NRI Taxation. I'm a chartered accountant from India and a CPA Australia with a background in international taxation. This company was formed in 2016, drawing from my own experience with filing Indian and Australian tax returns with a dual tax exemption. I realized I could help others in a similar situation. However, I could not have done without the tireless efforts of my fantastic team in Bangalore and Sydney. Thank you, Mangala and Pranati, for all your efforts. As an Australian citizen or a permanent resident, the objective is to lodge your Indian tax returns. However, there are many misconceptions about this. Let us address the top 5 myths one by one. Myth 1 is to think that if you don't bring the funds from India to Australia, you don't need to show it in the Australian ITR. For an Australian citizens and permanent residents, global income is taxable in Australia. This is a basic understanding. Company, Indian income gets taxed in India, Australian income will get taxed in Australia. So that is not the correct understanding. The correct understanding is that you have to lodge your Indian tax return and disclose those informations in the Australian tax returns and claim the dual tax exemption. So whatever the taxes which you have paid in India will be allowed as a deduction. And there is a specific clause in the ITR, the clause number 20, that if you have overseas assets more than $50,000, needs to be disclosed. These are simple, basic disclosure requirement, and this is according to the Australian tax rules. Myth number 2 is the belief that as an NRI, you don't need to file your tax returns in India. We all know that if the taxable income is less than 2.5 lakhs in any financial year, you don't have to file your tax returns in India. However, 2.5 lakhs income applies only to the general income. But if you have a specific income or a loss, like short-term capital gains from sale of shares or long-term capital gains or a loss from sale of property, irrespective of what you do with it, you will need to lodge your tax return in India. 2.5 lakhs rupees benchmark is not applicable in that case. In the refund situation, any TDS is the tax deducted source is a withholding tax, which you want to claim it back. And if you're going to claim a double taxation treaty benefits later, you will have to lodge your tax returns. I can give you an example here. And now you have an interest income of 50,000 rupees, which the bank has deducted, let us say 10% of TDS, which is 5,000. Now, you need to lodge your tax return and claim the refund. You will have to declare 50,000 interest, approximately $1,000 here in Australian ITR, and claim zero dual tax benefits because you have already claimed a refund. What people normally do is not lodge tax returns in India at all, then disclose that 50,000 equivalent of $1,000 in the Australian tax returns and claim 5,000 as the tax paid under the double taxation treaty rules. It is not allowed as per the double taxation treaty benefits. In short deductions of TDS, for example, when a bank deducts 10% and you fall under 30% tax bracket, in such situation, you need to lodge your tax return as well. And sometimes we feel that if I file my tax returns in India once, I need to file it every year. That is not correct. So you can stop it whenever you don't have any taxable income. If you're not falling under the same bracket, you don't have to do it. Myth number 3 is thinking that you can't file your Indian ITR if I miss the due date. You can file ITR after the due date by paying a late fees and interest amount. Due date for filing a belated return is 3 months before the end of the assessment year. Due date for filing tax returns for the year 21-22 is 31st of July 22. However, the returns still can be filed till 31st of December 2022. Any person can file, updated return. To file pending returns, we get like 2 years to lodge the correct return. If you're planning to sell your property, please lodge your tax returns correctly. One major reason funds get stuck in an Indian bank account is not having a valid bank account in the income tax portal. Sometimes validation error in the income tax portal can occur because the PAN and the phone number aren't the same in the bank account and the income tax portal. Taxpayer who have created the profile in the income tax e-filing portal can submit the income tax returns electronically. E-verifications of return can be carried out using a bank account, a net banking account, or an OTP generated from Aadhaar registered number if you have an Aadhaar card. If it is a simple return, please download the software, lodge it by yourself. It's pretty easy. And if it is very complicated, maybe at that point of time, you can reach out to a chartered accountants. Myth number 4, income exempted in India, also exempted in Australia. I can give you an example. The Indian agricultural income is exempted in India, but taxable in Australia. And same rule applies to NRI deposits interest, which is exempted in India, but taxable in Australia. This year, non-disclosure of NRI deposits interest was the main reason for getting ATO audit notice. This was due to the data matching between the India and Australian tax office, and TFN and PAN are linked. And same rule applies to PPF interest, which is exempted in India but taxable in Australia. The rental income is a different footing altogether because the rental income is always taxable. However, in one single component, there's a standard deductions offered in India is not allowed in Australian tax return. It has to be on the actual expenses incurred on rental properties. Dividends were exempted in India. Now it is taxable. The companies are usually withholds taxes. It was not the case. It is much more beneficial for us now because the dividends were taxable in the hands of the companies earlier. We couldn't claim any dual tax exemptions. Now the dividends are getting taxed at and our hands. That means we can claim dual tax benefits, which is really a good move by the government. And if you have any business income, let us take you're a partner in a business, so please disclose those income appropriately. And finally, myth number 5, gifting of cash and assets. No documentation, no deduction rules in Australia. That means what you can't prove with the documentation will not allow that as a deduction. Please don't assume that funds are transferred between the families as gift, unless otherwise it's proved. So I always recommend my clients to prepare a gift deed, make sure that all the clauses are in the gift deed so that the fund transfers are captured properly. So we don't get much time when we receive audit notice. We get like 4 weeks to reply to that. Inheritance versus gift. Whether you inherit the property from your family members or the parents gift your property at certain point of time. So these can be looked into in detail by various transactions and the other double taxation treaty benefits. So we will cover those in the following seminars. And Benami Property Act is something which everybody needs to be aware of, which is taking really taking a lot of people into surprise. Then there is penalties under the Benami Properties Act is little on the higher side, I feel. That is something which we will address at the later webinars. These are the services which we offered. Detailed written tax advice for the Australian permanent residents and citizens for selling Indian properties. So we prepare 4 different options, tax planning, and we strategize everything and we submit a written tax advice. Filing Indian and Australian tax returns with the double taxation treaty benefits, right? So how you can disclose your Indian income in Australian tax returns and claim the dual tax benefits. And assistance in selling properties in India, connecting with the lawyers, real estate agents, etc., and assistance in connecting with the real estate agents, lawyers, financial planners, and mortgage brokers in Australia. Thank you very much for your presence here, and I really appreciate your patience. Thank you once again. Good night.